Welcome back. You're watching Invest Africa, where we're still looking into sovereign funds on the continent. Still with me in studio is Brian Dlamini. He is country risk analyst at Rand Merchant Bank. And joining our discussion now from our Gabonese bureau is Simon Esono. He's CFO at the Gabonese Fund for Strategic Investments. Welcome, Simon, and thanks so much for joining us today. Let's take a look at the state of the Gabonese Sovereign Fund, because 2012 saw this replace the existing fund for future generations. So what's the status of things as it stands right now?
The Gabonese Investment Fund is a specific special purpose vehicle created by the government of Gabon in the attempt to restructure the old fund for future generation. As you well know, the Fund for Future Generation was mainly a deposit bank account in the books of the Central Bank of Africa. And in the attempt to boost the economic development or the diversification of Gabonese economy, it was important or necessary for the new government to set up a special instrument to try and carry out that mission on behalf of the government. That is to say, in order, we not only expecting the interest rate return on the deposit bank account, we are now aiming at having a better return from investment that we can take part in the country or overseas.
Yeah, with that being the mandate, then take us through your investment philosophy. We know that 20% of the funds invested locally within Gabon itself, 80% directed to foreign investment elsewhere on the continent. Take us through the investment philosophy.
Yeah, as you well mentioned, this is that's our policy. Our mandate is to propose that kind of policy each and every year that is being reviewed by the strategic committee. And for now, we're aiming at investing 20% of our budget in the country and 80% overseas. Overseas, not only in Africa, but overseas for us is the whole world. So we don't limit our investment policy only in the African continent. Mm-hmm. So we have some activities in Gabon or all over the world. We are currently discussing some investment opportunities in America. Of course, with the slowdown on the European continent, we had to review our policy. But with the new turn, with the new shape of the economy in the near future, Europe will not be a limit. Definitely, we'll have to investigate other investment opportunities on the European continent.
Brian, what's your take on the sovereign wealth fund model that we're looking at, the Gabon putting on the table? Because what we're essentially looking at here is a revival of a fund. It's a fund that's being tweaked many a time over in order to get it right and working optimally.
So from the perspective of saying, look, they're trying to get it to an optimal level where the fund really benefits the country, I say that is relatively positive. I think with the interesting part here is, there has to be some level of coordination between what government wants to achieve and what the fund also wants to achieve, in the sense that you don't want the fund overcrowding government or leading to inflation where it starts spending and leading to inflationary price pressures. So I'll be interested to find out from Simon, in fact, how the coordination happens between government and the fund, and how they get that mandate really aligned and in sync.
Simon, talk us through that balancing act that you have to play.
And it's clear, the basis for the existence of this new organization, which is the Gabonese Fund of Investment, is the law. So the law has had to be reshaped for us to have the current mandate. So what we have to do basically is stated in the law clearly. So, for example, we are prohibited from investing in derivatives. So our missions are clearly stated in the law, and of course, and we for example, the arm industry, we are not going to take any investment in that. May it be with good yield and return on that.
What do you make, Brian, of overall the regulatory environment and just how accommodative the legislative environment is of sovereign wealth funds on the continent?
So it's quite pleasing to hear that in Gabon, I mean, there's a legal framework, so there's accountability when there's a framework. So it's, I suppose, very important so that you can hold people accountable, and that, you know, it also strengthens the institutions in a country to say, post, say, a change of government, there's continuity in this fund because the law, as Simon has said, is there, and there's stipulations in the law as to, you know, what should happen. So you don't want to be in a situation where there's a change of regime and assets are frozen and there's no continuity and mandates are now in question and that type of situation.
And that's very much a reality. We've seen it play itself out in Libya. Simon, take us through some of the investments that you're currently making and the kind of return that you're looking to be reaping at the end of the day.
The return that is expected is clearly also is a mandate that is set by, that is given by our, if I can say, our strategic board. The strategic board being composed of the highest authorities of the country. So as well as you know, the inflation rates in the country is sitting about 3% every year. So for us, anything above that rate can be an interesting investment for us, provided that the other criteria are being met or looked into carefully, so that we don't put our funds into very risky investment that we cannot manage properly with the resources and the skills that we currently have available within our offices.
Brian, so that some of the risk mitigation that we're seeing the fund employ, we've got a diversification strategy that's very much in play as well. We've had comments, and these comments made at the launch of the sovereign fund of the Gabonese Republic, the fact that they see funds here or returns here replacing oil revenue in the Gabon budget. Do you see that as a viable target?
So wait, you're saying that the funds that are sitting in the sovereign wealth fund replace? Well, yes, it is, I suppose, a viable target. But I suppose also looking at the risk angle of it, I would also be interested to find out how a fund like this would look to manage its liquidity, because at some point there will be a shock to the economy, and there will be, a need to draw a little bit, maybe to replace. So it would be interesting as well to find out how that liquidity profile is actually
So before
managed.
we make an exit from this conversation, maybe just run us through that very quickly, Simon, the kind of exit strategies that you have access to.
Yeah, as I said, it depends. You can have a very different approach when it comes to liquidity risk. So our approach is basically to say, okay, let's look at any investment opportunity and let's look at the risk overall and all angles of the risk while coming to any specific investment. And within as we have some advisors that can take us through specific areas of concern when it comes to risks. And the good thing with our way of managing our risk is that at any time this is being reviewed by a specific committee, and decision can be taken as we go along with any investment opportunities and any investment project.